Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on the gold market. Gold market, as we said in the report, hardly should drop significantly just because the tensions and the really risk uncertainty that we have currently in the global world haven't disappeared, and it should hold the demand for the safe haven assets on a significant level for some considerable period of time. Besides, if even we keep all geopolitical tensions aside, the performance of the gold currently is absolutely reasonable even from the financial point of view, because on the common press conference of the Jerome Powell in Washington on Thursday, it's really big, or probably we could say that certainly it should start speaking about the impact on the geopolitical tensions on the situation inside of the United States. And probably, at least it's really very high probability that he should touch the topic of the rate change, that it might be not as strong as it was supposed initially. And actually, the gold performance shows that markets are preparing to it, because initially, as you know, mostly the 0.5% rate change already have been priced in, and the decision with just 25 points change, well, it will be definitely supportive and a backwind for the gold. The same price action we have on other markets. So we could see on the Canadian dollar on the weekly chart we have bearish grabbers as well. On the dollar index that we discussed today as in euro currency, we have the spikes here. This is weekly chart, guys. Last week we've got grabber. It's just moving down below the zeros. And this week again, we could get another grabber. We have some riddle on the euro currency that we discussed, but on the other markets, all of them are mostly constant with this overall stuff. Finally, the treasury bonds also, it seems, starting withdrawing the chances that it might be significant rate change. So it kept dropping. Instead of the upward continuation to this level, you can see yesterday we've got a bit deeper retracement right here. There's a drop of the yield that also supportive for the gold market. Finally, from the technical point of view, on the gold we've got first grabber that actually suggests taking out of this top, and today we could get another one. Another one, this minor grabber, suggests actually moving just above this top, because here we have, you can see, local top, because it's above this one. But that grabber, because recent top stands right here, it suggests moving above it. Here is another tricky moment, because if we said on the monthly chart we should get the bearish grabber, and we've got it. Actually, this spike is a bearish grabber on the monthly chart. It suggests drop somewhere to the 17, below the zero, 1740. And what will happen around it, it's also the tricky moment that we have. But it's really big room for action till 1973, and market is not at overbought currently. 4 minutes grabbers suggest that it might return back to this area. So all other targets that we have discussed, if you remember, we have the cluster of targets 1976, cluster of targets around 1960. All of them have been reached. Now the next cluster of the target stands above the all-time high, which is actually right here. The XOP of this ABCD pattern stands 1262. The major ABCD pattern here, XOP, stands 1275. So both of them stands above the long-term top right here. This one is below the top, but this ABCD pattern stands above the top. It's a pattern that we discussed in the weekly report as well. So as you can see, lots of interesting things could happen nearest time on the gold market. But meantime, keep watching for these grabbers. This might be really a good background for trading. Potentially, it could suggest that some maybe geopolitical tensions increase, because currently it's difficult to count on its easing. So that's another reason why I suggest that it should not be a really big pullback on the gold. If you remember, we said that hardly market should show the dropping below the 1860, 1855 area. That's our some kind of the signal line. And we thought that market should stay above it. And you can see with this action, market stands even above the minor retracement. So it's, in fact, we could say that market's just coiling around the top. So it has been washed out, and market still stands here. This is definitely bullish price of action, because usually reversal happens differently. So market just washes the stops above the area and starts dropping. If it washes the stops and just keep going, keep coiling around it, it's definitely a bullish moment. So the question about how to take the position. The classical approach is just trying to take the position with the stop somewhere below these lows and watch how grabber starts working. But potentially also, what's the risk factors we have? Here we have minor grabbers here and here. That just theoretically some more fluctuations might happen around it. If you remember, also consider this ABCD pattern, which has the COP around 1870. And potentially, well, it could work. It's just because until the Jerome Powell statement and non-farm proposals, we have the 2-3 sessions. So actually, it might happen that market will touch this area first. It would be better to deal with all this stuff. As I said, theoretically, you have a classical approach. So you could consider, for example, taking the position somewhere below this area or below a confluence, for example, this first moment. And you could simultaneously use the stop buy order. For example, you could place stop buy around the C point, because COP is based on these 3 points. If this point will be eliminated, it will be just clear signs that market is going higher. And the breakout of C point, it probably will be the big sign of the further upward continuation. So it will show you that market is out of the consolidation. So you could place the limit order here and the stop order here. If market will drop, your stop order will be not touched. If stop order will work, you could just cancel limit order later. So these 2 moments that you could use, or you could use just one of them, so depending on your style of trading, your personality. So that's approximately that you could consider, because at this point with this coiling action and a few grabbers on the lower time frame, it seems that market is nervous a bit. And it's difficult to suggest whether this will be some spike down first before upward action or not. Well, in this situation, it would be better to combine possible different orders for entry, or use the stop orders that we very often recommend to do in such circumstances. So that's what we see on the gold. And let's see what will happen next.